Rezolve AI PLC is currently trading at exactly 3.58 USD, showing a massive intraday gain of positive 0.57 USD, which translates to a significant 18.94% surge on the session. When you see a stock nearly hit a 20% gain in a single trading day, the immediate assumption, the expectation, is that we're witnessing a classic pump, a retail frenzy driven by hype, or perhaps a short squeeze triggered by chat room momentum. You might look at this chart and assume this is just another speculative flash in the pan, a company riding the coattails of the broader artificial intelligence bubble that has lifted everything from semiconductor giants to small-cap software firms. The general consensus often whispers that these movements are fleeting, noise in the system that savvy investors should ignore. However, the reality of what is happening with Rezolve AI today forces us to look much closer at the plumbing of the mobile commerce industry. What we are seeing isn't just a volatility spike, it represents a potential repricing event based on the market finally understanding the difference between chatty AI and agentic AI. While the expectation is that all AI stocks are the same, the reality is that Rezolve is positioning itself not as a chatbot, but as the transactional layer that actually executes commerce. And that distinction is what is driving this volume today. To understand the magnitude of this 18.94% move, we have to look at the liquidity flowing into the ticker. This isn't just a few hundred retail traders tapping buy on their phones. The order flow suggests a mix of algorithmic chasing and genuine accumulation. When you look at the broader market context, investors are currently starving for the next NVIDIA stock. Everyone knows the hardware story, but the application layer, the software that actually utilizes those chips to generate revenue, is still a chaotic battleground. Rezolve AI, trading under the ticker Rzlv, has been volatile since its de-SPAC process, but today's action feels different. It feels like a breakout from a consolidation zone that has frustrated early holders. If you are sitting there watching the tape, you are seeing rapid-fire execution, the kind that clears out the sell-side order book level by level. This is the tension between the fear of missing out and the fear of holding the bag. And right now, the buyers are winning that psychological war. Let's pause for a second and consider how the average person engages with this market. If you are engaged in self-investing, perhaps using a platform like Robinhood app, or managing your own aggressive growth portfolio, a stock moving 19% is a siren song. You see it on the top gainers list, and your instinct is to investigate. However, the tools you use matter. A user on the Robinhood stock trading interface sees the percentage gain and the line chart going vertical. Meanwhile, someone using a more robust active trader workstation, perhaps via interactive brokers trading platforms, is looking at the bid-ask spread and the volume-weighted average price, realizing that this move is sustained by high turnover. This dichotomy in how investors perceive the move is fascinating. The Robinhood Investments crowd sees momentum. The sophisticated money sees a volatility event that might signal a fundamental shift. This is where the concept of online investing gets tricky. You have access to the same price, $3.58, but the interpretation of that price varies wildly, depending on whether you are looking for a quick scalp or a long-term hold. The narrative driving Rezolve AI is centered on agentic commerce. Most people are familiar with ChatGPT or similar large language models where you ask a question and get text back. That is passive AI. Rezolve is building Brain, a suite of products designed to take that interaction a step further, instantly turning a query into a checkout event. Imagine asking your phone, "I need a blue dress for a summer wedding." And instead of getting a list of links, the AI presents the exact item, in your size, ready for a one-tap purchase. This is the holy grail of mobile commerce. The expectation from the market has been that giants like Apple stock or Google would naturally own this space because they own the operating systems. The reality, however, is that those giants are often slow to integrate deep commerce capabilities directly into the interface due to antitrust fears or legacy code issues. This leaves a massive gap for a middleware player like Rezolve to step in. The reason the stock is up today could be attributed to the market waking up to the fact that Brainpowa, their proprietary LLM, is actually being deployed and gaining traction, rather than just being a slide in a pitch deck. We need to talk about the broader ecosystem of investment help and how it applies here. If you were to go to a traditional advisor, perhaps someone involved in Fidelity Wealth Management, they would likely tell you to stay far away from a stock like Rzlv. They would point to the volatility, the lack of a long track record, and the risks associated with recent SPAC mergers. They would steer you toward Fidelity mutual funds or Fidelity ETFs that track the S&P 500. And they wouldn't be wrong, strictly speaking, for a conservative portfolio. But the modern market is not just about preservation, it is about asymmetric risk. For those using investing sites to find alpha, the appeal of Rezolve is exactly what the wealth managers hate, the potential for explosive repricing. It's the same logic that drove early investors into Tesla stock years ago, the idea that a new technology could fundamentally alter consumer behavior. If Rezolve's technology works as advertised, it reduces the friction of buying things on a mobile device. Friction is the enemy of e-commerce. If you can reduce the time from "I want this" to "I bought this" by even 10 seconds, you are looking at billions of dollars in unlocked value. However, we must remain grounded. The stock is trading at $3.58, not $350. It's a small cap play with all the dangers that come with it. When you look at online investing discussions, you often see polarization. On one side, you have the believers who see this as the future of retail. On the other, you have skeptics who remember the dot-com bust and look at every new tech company with suspicion. If you are using SoFi Invest or engaging in SoFi investing strategies, you might be utilizing their social features to see what other traders are saying. You will likely find a mix of confusion and elation today. Why is Rzlv up? Is probably the most common question. The answer isn't always a singular press release. Sometimes it's a sector rotation. We have seen money flow out of the megacaps and into the AI application layer, companies that are small enough to double in valuation if they secure a single major partnership. Speaking of partnerships, this is a key part of the Rezolve story. They're not trying to replace the retailer, they're trying to empower them. Their tech integrates with existing backends. This is crucial because it lowers the barrier to entry for their customers. If you are a massive fashion retailer, you don't want to rebuild your entire store. You want a plugin that makes your store smarter. Rezolve offers that. This B2B2C model is less flashy than a consumer app, but it is often where the real sticky revenue is found. It is similar to how NVIDIA stock isn't about selling video games, but selling the chips that power them. Rezolve wants to be the engine of mobile commerce. Now, let's address the mechanics of trading this today. If you are on the Interactive Brokers platform, you are likely seeing high implied volatility in the options chain if available. This means the market expects the price to keep swinging. For those in Robinhood Cash Management or using Robinhood fractional shares to build a position, the entry point of $3.58 allows for significant share accumulation with relatively low capital. This accessibility drives retail volume. But be careful. Low-price stocks can be unforgiving. A 50-cent move is massive in percentage terms. If you are used to trading Apple stock where a 50-cent move is a rounding error, you have to adjust your risk management for a stock like Rzlv. The Interactive Brokers fees may be low and the execution fast, but if you are on the wrong side of a momentum shift, the losses accumulate quickly. Comment below how many shares of Rezolve AI you currently hold, or if you are waiting for a pullback before entering. It is always interesting to see the average cost basis of the community during a breakout like this. Let's pivot to the future outlook. What happens next for Rezolve? The expectation is that they will burn cash as they scale. This is standard for high-growth tech. The reality, however, depends on their SubSquid and SmartPay integrations. They recently made moves to acquire infrastructure that bridges the gap between traditional commerce and Web3 and crypto payments. This is a wild card. If the crypto market heats up, Rezolve's ability to handle digital asset payments could act as a secondary catalyst. It makes the stock a hybrid play, part AI, part fintech. For users interested in Robinhood crypto, this crossover is appealing. It suggests the company is looking at the future of money, not just the future of shopping. However, the risks are real. Competitive is fierce. Every major tech